Hey folks, here we are again today, our monthly meeting with Tim and our state of the market. Tim and I have been pretty buyer stressed out here lately. I think it's the market is the word of the day is going to be aggressive. That's going to be our word of the day because January and February for buyers has been very aggressive. It's due to very, very low inventory. It's been, and we were chatting about it before the camera came on here. There's a lot of factors. I mean, even something as simple as like the ice storm was like 4 or 5 days where sellers are like, I'm not going to list my house yet. I mean, it's been crappy outside. I got my kid here virtually learning. I'm not ready. And that kind of like, even those little minute things has been really tough for buyers. So, Tim, is that kind of what you're seeing on your end as well?
Yeah, we've talked about this a lot in these videos, is trying to put our finger on why this market is the way it is. Why are there inventory issues, first of all? And we've been talking about that for what it feels like 2 years. It's been a while now that where
Yeah.
we said, hey, we need your inventory. If you're looking to sell your house, reach out. You can find a buyer quickly. Sell your house for top dollar. I think the excitement for buyers, it pushes them out into the market and it has them say, okay, we're ready to buy a house.
Mhm.
And there's, that obviously that inventory issue makes it so that there are a lot of buyers and very, very, little, there's not too many houses to pick from. Those buyers they're not as patient as we kind of hope that they would be, because rates are low. They know that they can afford the most that they can. And once you flip that switch and say, hey, I'm ready to buy a house, you might say, we're not in a hurry. But how many times, Billy, have you heard that from somebody and the very next day they send
Ready
you
to go.
and say, hey, let's go see it? Once
Yep.
you flip that switch and say, I'm ready, it's hard to be patient. So not to fault anybody and a buyer, because we want you to be excited, but that's the issue for you to say, hey, let's just be patient. Eventually something will come
Yep.
on the market. It's hard to say that. It really is.
It's tough. And the conversations I'm having to have now are a lot of responsibility and or your job and my job, in that I have the talk, you're going to be overpaying for this house. Like there's no way around it. Like you're paying more than it's really worth. So in your head, if you think you're going to be in this house for 3 years, 5 years, you need to be super careful. If you're going to be in this house for 7 years, 10 years, or like this is your forever home, cool, we got this. It's not a problem. We're good. But if you in your head right now are thinking, I don't know where I'm going to be in 7 years, or I'm going to have 6 more kids or whatever, we got to be very, very careful, because you're going to get into homes where you're overpaying a little bit. It's going to put the value in the next few years. You're going to be undervalued a little bit. You're going to be no closing help. That's happening a lot. And I'm sure you're having those same conversations. What kind of loans and so forth are you seeing that will help people get an advantage?
Well, I mean, the cookie cutter standard 20% down conventional loan is just, I mean, those are the ones that as a listing agent, you go, okay, this person's doing a conventional 20% down loan.
Yeah.
That is the lowest risk for a seller to accept an offer, because that is that buyer obviously has a lot going for them. Um, Not to say that a USDA or a VA loan they're putting no money down is necessarily a bad thing. But the problem is when you have 10 offers and one of them is they're putting a ton of money down, and you can tell that that buyer probably has better qualifications because of the loan program that they're pursuing. The listing agent has to, I mean, you're splitting hairs, but they have to kind of edge that above the other one that's not putting any money down. It's unfortunate, but it's true. It happened very recently with a client of mine who was only putting 5% down, and the next person was putting 10% down. She goes, look, the number's very similar. Neither of you are asking for closing costs. You're waiving inspections. Both of you have these clauses that are taking your price to a certain number. The only thing I can point to that's better than the other is one's 10% versus 5%. Sorry. And my buyer couldn't put any more than 5% down. And they're going, we did everything we could do. There's nothing else that could have been done in that situation. And as a listing agent, you go, hey, I'm sorry. I had to pick one, so these little edges in
Yeah.
these negotiations are winning out, and it's really, really crazy. So if you have a scenario where you're a USDA buyer, no reason to change and
Yeah.
family member and say, hey, can I get a gift and switch to a conventional loan? Just stay the course. USDA is a great program. It's a no money down loan. And once you get into that house, you'll be happy that you did it.
Yeah. Now you do little things I know too. Very frequently you'll call the listing agents and stuff or field their calls and explain nothing personal about the people, but enough that a listing agent will know that they're serious. And you do a lot of pre-qualifying and you get a lot of that stuff together, which makes your pre-approval letter stronger than some others. Is that right?
Yeah, the last thing that I want to do, and I did this last week where I called a listing agent and the offer hadn't even been submitted yet. And I said, just, you're going to receive an offer later today. It's going to have my pre-approval letter attached to it. Here's a little bit of details of where I am with the file. I'm not going to want to put my reputation on the line with a letter that there's missing, I haven't seen a pay stub, or, all I did was pull credit and the client says I made this amount of money. I want it to be a very strong file so I can make that call to the listing agent and be strong and be very, very calculated with my words. And that really does go a long way, as long as the numbers in the offer are fit for the seller as well. That conversation goes a long way, because the big banks and the online lenders and things like that, you're just not going to get it from them. So I try to do that as often as I can.
Yeah. So we do little things like we use local lenders like yourself. We have local title companies. We have local inspectors that know what they're doing. So we do a lot of little things like that that often help. So, but yeah, you're right. Like it could be a matter of, hey, we use Velocity and they're in Prince Frederick versus a big title company, or Tim and his pre-approval letter versus Chase Bank, and those things could be it. That could be like the deciding factor sometimes. It's crazy.
If you win a contract in this market, it is something to be proud of, especially one that has a lot of activity, because I mean, you have to pull out all these different tactics as a realtor and as a buyer that you didn't have to use before. And as a lender, to take that effort and to make a phone call to the listing agent, some of us may have done it in the past. It's just that much more important to do it now. So for you to go up against 10 offers, do everything you can to win that contract and finally get it, it is really something to be proud of. And like you said, you might be buying at the top of the market, but if you're somebody that's looking to get into this market, this is why we do these videos, is to prepare you, because we don't
Get ready.
get disappointed and make 15 offers and go, what the heck, Billy, you didn't tell me this.
Explain that. What are you doing?
Yeah.
All right. So another strong one that we have been doing, we talked about a little bit off camera, was their earnest money deposit. So if you've never done this before and you're a first time buyer, what you have to do is put down a deposit, and it works kind of like a rental in a way that if you do all the things you're supposed to be doing, when it comes time for closing, you get the deposit back in the form of reduction of your closing costs. It helps with your closing costs, right? But we can do things like make them bigger. You can make them 2,000, 3,000, 5,000 sometimes. And again, you'll get them back. But if you decide to change your mind, especially if there's no reason, you could technically lose it. But Tim, there was two things we talked about. Where those EMD funds are coming from is important, right? And not making any huge deposits or big reductions. If you want to talk about that for a second.
Yeah. So when you make an earnest money deposit, in order for us to credit that to your bottom line at the end, at closing, whether it be 1,000, 2,000, 5,000, the larger the earnest money deposit, the more important that you get that credited towards your bottom line. We have to source it, and we have to show a bank statement to say, okay, this is where the funds came from. And we see it coming out when that check clears or that wire clears. Cash is a killer in this business. If you have a huge deposit of cash anywhere in your bank statement, we have to ignore it. However, if it's around the time of your earnest money deposit being written and you used cash to deposit and then write your check, we can't use that earnest money deposit. We cannot credit to your bottom line, because we don't know where that cash is coming from. It could be a gift. It could be, drug money. We don't know. We have to know where it's coming from. So very recently we had one where the day that the large earnest money deposit was wired, there was a dollar for dollar cash deposit of that same amount. And it came from the guy's safe. And I said we couldn't use it. Luckily, he had another account where he just did another wire. The title company or the brokerage reimbursed. But you have to be careful. Think, no matter what program you're using, cash can be a problem for lending. So try to refrain from depositing large amounts of cash into your bank account. Sometimes you can't get around it. Just call your lender and talk to them about it before you do it.
There you go. So if they're going to, this is my question and my follow-up, like if they're getting themselves ready to buy a home and they got the cash, even though banks are like, giving you like 0.00000001 interest right now, and you're not gonna. It's still, now would be a good time. And then how long would it have to sit in there before you can start using it?
We want it seasoned for 60 days,
Okay.
just as a general rule. Depending on your loan program, every now and then there's a scenario where we might only ask for 1 month of bank statements, but that's a very small box. For most programs, we want 60 days of bank statements. In order for us to not see that cash deposit, it has to be in there for 2 months. Otherwise, we're going to see it. So let that season for, if you have a lot of cash that you know you want to use for a home purchase, put it in the bank now, let it season for 2 months,
Okay.
and then you'll be poised to make an offer at that point. Um, you can do other things, try to get a gift from a family member or something like that, and then reconcile it later. But the last thing you want to do is go ahead and make that offer and then go, wait a second, I have cash. It's too late at that point.
Yeah. Yeah. And that's our conversations now. Like the market's not much inventory. So to be in prepare mode, you should be getting yourself ready, getting prepared. You have money aside because you're not going to get, probably not going to need any closing help, not making any big purchases. Like if the house is in your goal and that's what you're trying to do this year, these are the things you could do. And it sucks putting it in the bank account because I know like Bank of America, PNC, these other people aren't giving you anything for it really, but
Well,
you need it to
it's
act.
not earning anything under your mattress either. So
That's right. So get yourself prepared, and that's really our message for today. One is that buyers need to be aggressive, and two, you need to get yourself prepared, and that's kind of our message, I think, today.
And I do want to mention, I always kind of talk about rates. On Friday, we definitely had an uptick in interest rates. If you were quoted a rate on Thursday, that rate might not have been there on Friday because of what happened in the bond market. There's a lot of talk of a big stimulus package and what that might do to inflation. Inflation's bad for mortgage rates. So a lot of things are happening in the market. We think that spike is maybe plateaued and it's not going to continue from what I'm reading. But just make sure that you're working with your lender, because if you're expecting your payment to be based off of a 2.75% rate and then it spikes to 2.8 or 3%, you have to know that $30, $40, $50 increase in payment is going to be there when you go to lock in. So just, always talk to your lender as often as you can.
I've been kind of preparing most of my buyers for the idea that it's going to be like 3.25, maybe by the end of summer, somewhere in there. And if it's not, sweet, but we're planning for like that kind of uptick. And then it's funny is I get a lot of like the younger buyers and stuff. They're like, oh man, 3. And you're like, my first was like almost 6. 3's fine. We're still like, it's still an amazing rate. And you still can't even get a car loan for this rate and you're buying a whole house.
Yeah.
But
From a lending perspective, when we pre-qualify somebody, the idea is they're going to buy very soon. So you qualify them on the rate that can be given that day.
yeah.
If I know that it's somebody that's going to be a long-term client, sometimes I'll qualify them on a 0.25% to 0.5% higher interest rate, just in case something changes. Cause I would hate to say, hey, you're qualified to 400. And then they come back in 4 months and they go, hey, we found a house for 400. We want to make an offer again. We qualify for 375 now because the rate's up. That's very key in new build situations, which of course we don't have much of that right now. There's not a whole lot here locally that for new builds, but a loan officer that's qualifying on a new build, you have to build in a rate increase because the house is not going to be ready for 4 to 6 months anyhow. So just another reason to talk to your lender and say, hey, I'm pre-qualified now. What rate are you using? Where's my payment going to go up with a 0.5% rate increase? So you're prepared.
Yeah. That's it. Name of the game is preparation. If you want to jump into this market, that's perfectly fine. There are some good deals. There are some nice houses. There's some people that are moving out, doing things like I have 3 or 4 listings coming up here soon. So it's happening. But if you're able to wait a little bit, a couple of weeks, and it's so like weird, like weather and virtual learning, schools are going back in, like all these little weird things are starting to like come around. If you can wait and get yourself a little more prepared, that works too. Either way, we're not here to tell you what to do. We're just here to get you ready for when you make that decision.
Yeah. And we were able to navigate last year a lot of uncertainty. And in March and April, when, we thought that COVID would be on our Amazon boxes and people were wiping them off with Clorox wipes, houses were still being sold. People were still seeing them walking through houses. So, this market, it's hard to say, why why would anybody be scared today when we know so much more about this pandemic than we were a year ago? So I don't think that's necessarily, I think there's just so many other circumstances, like you said,
Oh,
whether
weird stuff going on.
we're
Yeah.
learning, we just don't know. We're just here to tell you what it is. And that's what it is that there's very little inventory, and hopefully that will change soon, because we do have a lot of buyers and they're ready to buy a house.
And they're really well qualified and good jobs and all that stuff.
Yeah.
All right, man. I know you're busy, so we appreciate this. Hopefully everybody got a chance to learn and get themselves ready to be good buyers, and they'll reach out to you once they are. And then we'll work and navigate this crazy little market we got going on together.
Yeah, absolutely, my friend. Looking forward to the next one.
All right, we'll see you again next month, sir.
See you, buddy.
All right.